So Trump tweets out a ceasefire headline. He gets the VIX to sell off. So you got a bunch of people that's just selling vol, selling vol, selling vol. And then this whole hosh-posh / mosh pit of liquidity says, oh, volatility's down, then we got to buy. They buy, prices rise. If the prices rise, that drives the VIX lower. So you get this like really powerful feedback loop where Trump is able to use headlines to impact these volatility indexes, and these volatility indexes are what's used at these hedge funds and these large quant firms to lay risk on or off.
Something is seriously off in the global markets right now, and it's getting harder to ignore. Since the start of his second presidency, we've seen a pattern that goes far beyond normal market volatility. Sudden tariff announcements, abrupt reversals, geopolitical headlines dropped at just the right moment, and every single time, markets react instantly. Stocks swing, oil moves, crypto spikes or stalls. And in many cases, those moves appear almost predictable. Critics and economists are now openly questioning whether this is coincidence or something much more calculated. From the now infamous "this is a great time to buy" post before a tariff reversal that sent markets surging, to suspiciously well-timed oil trades ahead of ceasefire headlines involving Iran, the pattern is becoming clear. Massive amounts of capital are moving before the public fully understands what's happening. And then there's crypto, the one market that was supposed to be free, decentralized, untouched by political influence, now caught directly in the crossfire. Even concerns around entities like and political ties to digital assets are raising deeper questions. Is crypto still independent, or is it now just another lever in a much bigger system? Strike CEO Jack Mallers breaks it all down in the latest episode of his weekly podcast. Mallers describes a well-oiled manipulation machine that goes far deeper than most people believe. He describes a terrifying, unethical system where headlines don't just report reality, they create it. In this video, we're breaking down exactly what's driving this market, from volatility suppression to algorithmic trading loops, to why Bitcoin might be the only asset that still offers a way out. If you want clear, no-nonsense breakdowns of what's really happening in crypto and global markets, make sure you like the video, subscribe to the channel, and drop your thoughts in the comments below. Thanks, and enjoy the video.
Bringing it all the way back, why is Bitcoin up? We'll get into it in a second, but is Bitcoin and stocks up a reflection of society healing, of the conflict ending, of things improving? I'm afraid not. Now, why is Bitcoin a solution to everything I just said? Well, Bitcoin's the rare asset that we can all own. What does the guy or girl do with $50 in excess capital after their paycheck? What does the guy or girl do that has barely any savings? How do they get in on the asset game, on the currency debasement? How do they get in on the assets? They can't get the Manhattan penthouses. They can't get the Miami beachfront real estate. They can't get the professional sports teams. Hell, I can't get any of that shit. What can we all get? Bitcoin. What performs the best of all of these things? Bitcoin. That's why I invent something like Strike. That's why we have no fee DCA, right? Everyone can get in on this. That's how Bitcoin solves this. But my point is how do I articulate this? Seeing assets go up right now, it's just interesting to me. It's not a reflection of the state of the world. It doesn't mean they won't continue to go up. I mean, my stance to you guys has been pretty firm over the last few weeks. Just turn on your DCAs. I mean, I'm not a genie. I have no idea what's going to happen. Don't take my advice as financial. Hell, turn on the DCA. Always be stacking. Always be stacking. Could Bitcoin go to 100K from here? Yeah, 100%. Could it go to 40K from here? I mean, yeah. Global supply chains are falling apart. Yes. And consumer sentiment is at all-time lows. 100%. Just stack. So the other thing, last episode I talked about, well, maybe Bitcoin is diverging from software. Let me see if I can zoom in on this asset so Bitcoin's in the orange here, and you can see right here, I don't know if you guys can see my mouse when I do this, but right here, the orange was popping up. So Bitcoin was performing really well while software was crashing. And there was a split second where I was like, holy shit, is software really going to crash and AI is going to eat its lunch while Bitcoin rockets to the moon? Is this the divergence? It took a global supply chain seizure, Strait of Hormuz shutdown, war for Bitcoin to really, and Bitcoin's now being used in commodity settlement and in energy trade. Are we entering the petro Bitcoin era? No, me. The software just ripped the face off of everything, and S&P 500 hit all-time highs. Software's back, and Bitcoin, as it does, was just a leader. It was just a leader. I saw people tweeting last week, oh, maybe software's leading Bitcoin this time. You fool. Bitcoin comes second place in nothing. There is no second best. You fool. Software looked at Bitcoin, looked up and said, yo, hold my beer. And so anyways, there is no narrative here that Bitcoin is turning into digital gold in front of our eyes, that the stock market's about to get murdered. Everything is up. And so I tried to look into this and understand what the is going on. Why is everything up? And this is my best theory. And again, just a reminder, the real answer is I don't know, but I host a podcast that has only myself on it, and I sit in my closet and I just talk to myself for hours. So given I don't know isn't a sufficient answer for the show, I'm going to wax poetically about what is my best guess. My best guess is this. On the left, you have the VIX, which is volatility index. And on the right, you have the MOVE index, which is the same thing, but for treasuries. If you guys take a look at these charts, volatility index was about to break through 30. And if you see when the VIX hit well over 40, which was in April of last year, this was the Liberation Day or week or whatever the hell that was, and then came crashing down. It looked like we were going to have a repeat of that. It looked like the VIX was well on its way to above 40 and higher. And out of nowhere, it came tumbling right back down to under 20. Same thing with the MOVE index. The MOVE index was approaching 130, and we know that as soon as it gets around 150, 160, 170, it's immediate print money. Immediate. Mayday, print the money. And the MOVE index shot back down either. Shot back down as well. And for me, this is why assets are up. Assets are up because volatility's down.
What Mallers is pointing out here is critical. Bitcoin going up right now is not a sign that everything is getting better. It's not a signal that the global economy is stabilizing or that geopolitical tensions are easing. In fact, it might be the exact opposite. Because behind the scenes, what's really happening is a growing disconnect between how people are actually living and what asset prices are doing. Consumer sentiment is weak, supply chains are under pressure, global tensions are rising, and yet markets keep pushing higher. So the real question becomes, if the world is getting more unstable, why does the system look so calm on the surface?
What you should be asking is, why is volatility down? The outside world is chaos. It's mayhem. The world has never been more volatile. We're entering this multipolar world, the United States coming off of kidnapping another country's president. Literally like we're trick-or-treating. Like ring the doorbell, hi, take this president, fly him to Manhattan for a photo shoot in a Nike Tech jumpsuit. We then go pick another fight in the Middle East, or they pick a fight with us, I don't know, whatever side you're on, I'm a Bitcoiner, f*** you. We get in another fight. Politicians lie, steal, war. We're still in it. The strait's still closed. Global supply chain seizing up. Even the great big bad factory of the world, China, is starting to have issues. The world's never been more volatile. Our sitting president has an approval rating in the 20 or 30s. Last time that happened, he got impeached. Midterms are this fall. The world's never been more volatile. What do you mean volatility's down? And to me, this is the best example that we don't live in free markets anymore. We live in, so my next slide is just how market structure works. In my opinion, is that we're just witnessing this fiat. How do I articulate this to the common man on a show? When you print so much money in all of this fiat that's sloshing around in the filthy fiat financial system, you have all these hedge funds and all these quant traders and all this Wall Street gobbledygook, non-productive nonsense. These guys have all the same trades on. So here's the little diagram I made. Trump puts out a headline that we have a ceasefire. That headline drops the VIX, which means volatility down. Volatility goes down, CTAs must buy. That's how these programmatic funds work. All these hedge fund bros that are at happy hours telling you in Manhattan how their hedge fund's better than the other hedge funds that you've heard about. No, it's not. These guys aren't unique thinkers, okay? They all poach the same quants from all the other firms, and those quants get paid a big signing bonus to implement the same shit that they learned at Citadel. I'm just being honest. I'm telling you the truth. So Trump tweets out a ceasefire headline. He gets the VIX to sell off. So you got a bunch of people that's just selling vol. And then this whole hosh-posh / mosh pit of liquidity says, oh, volatility's down, then we got to buy. They buy, prices rise. If the prices rise, that drives the VIX lower. So you get this like really powerful feedback loop where Trump is able to use headlines to impact these volatility indexes, and these volatility indexes are what's used at these hedge funds and these large quant firms to lay risk on or off. And so you get Trump pushing a risk off, which allows people to sell volatility. VIX crashes, people systemically buy assets. When people buy all the assets and pile into the assets go higher. The higher the assets go, the lower the VIX goes. And so when I go back, you see this like chop of the VIX, where the VIX gets up to 30, gets slammed down, gets up to 30, gets slammed down. And so anyway, I took a look into this. $37 billion of systemic community. These guys are systematic. These guys are still short U.S. equities. So they have a lot of assets to cover. This is what I guess I think market structure is what's driving prices higher, personally. I think it's market structure. It's engineered lower volatility. I guess I am nervous to see consumer sentiment and asset prices diverge so much. We are now starting to realize all of the fiat policy that's been imposed on the people for so long. The higher assets go, the more pissed off the common man is going to get, because he still can't afford a home. He still can't afford groceries. He still can't afford rent. And what is that going to do to the social contracts, to the political agendas that we end up electing, like what's happening in New York, to violence, both politically and socially? I'm very happy that Bitcoin is up. Do I think we're back in a bull market and we're going to all-time highs? I don't know. It's totally possible, but it's also totally possible that the markets start to price in what the physical reality of some of these supply chain things. But this is my best guess. People are like, why is Bitcoin going up? I don't understand. My best guess is, fiat and money printing has gotten so bad that right now you have a president who's just announcing headlines purely based on the stock market and trying to manipulate asset prices. And so you got these quant firms that are hooked up to his Truth Social account. And if he announces a ceasefire, they start selling volatility and piling into assets, which you get these short squeezes and then it goes the other way.
This is where we put everything together, and honestly, it's hard to look away once you see it. Mahler's lays out a system where markets are no longer purely driven by fundamentals, but by structure. Now, combine that with political influence, headline timing, policy shifts, and strategic messaging, and you get something even more powerful. A feedback loop where a single post or announcement can ripple through trillions of dollars in assets. Take Howard Lutnick, the U.S. Commerce Secretary, and his direct connection to the firm Cantor Fitzgerald, now run by his sons. Cantor Fitzgerald was actively buying tariff refund claims from companies at just 20 to 30 cents on the dollar, while tariffs were being aggressively pushed at the policy level. Today, those same claims are now being paid out at full value as the government processes roughly $166 billion in refunds. Do the math. A $25 million outlay on discounted claims turns into $100 million returned. That's a $75 million profit, roughly a 300% gain, and that's on just one example. The firm itself stated it had the capacity to scale this strategy into the hundreds of millions. But the most important thing to note here is Lutnick wasn't just a bystander, he was a key architect of the very tariff policies that made this opportunity possible. He pushed for them, defended them, and reportedly resisted efforts to scale them back. Then, before fully stepping into government, he transferred control of his firm to his sons and structured his financial interests through a trust, benefiting from a tax-free buyout reportedly worth hundreds of millions. And while all of this is happening, there are real-world consequences that most people are only just starting to feel. Over $166 billion in tariffs is now being refunded, but not to the people who actually paid for them. Consumers absorbed the higher costs for over a year through increased prices on everyday goods. But now that refunds are being processed, that money is going straight back to companies, the importers of record. Not retailers, not households, not you. Over 330,000 importers, tens of millions of shipments, more than $127 billion already processed, and yet the average person sees none of it. And while that refund process is happening, new tariffs are already being introduced under different legal frameworks, potentially rising even higher in the coming months. So just think about that for a second. The system charges you more, inflates asset prices, redistributes capital upward, and then uses volatility suppression to keep everything looking stable on the surface. And this is exactly why Bitcoin matters in this conversation. Because whether you agree with Mallers or not, his core argument is simple. In a system where access to traditional assets is increasingly limited, and where market behavior is shaped by forces most people can't see, Bitcoin remains one of the only assets that anyone can own, without permission, without gatekeepers, and without needing millions to get started. But even Bitcoin isn't immune to the system around it. It's being pulled into the same liquidity cycles, the same macro forces, and the same volatility-driven flows. So the question isn't just whether Bitcoin goes higher from here, it's whether the system itself can continue operating like this without breaking something much bigger. If you found this breakdown valuable, make sure you like the video, subscribe for more deep dives like this, and let me know in the comments, do you think markets are being engineered right now, or is this just how the system works? Thanks for watching, and I'll see you in the next one.